Well, like you said, my name's Hauge. I run a couple small crypto startups here in town. I also write articles on Seeking Alpha. Currently the opinion leader on cryptocurrencies there. Have some pricing models and I do reviews and stuff like that. Always trying to stay active in the community, that kind of thing. Hmm. Well, a friend told me about it in 2015. I was working as a software engineer, and I was really interested just in the whole concept, especially the part that it was open source. And I really liked the idea of these open source projects. I was an open source developer, and so I knew how powerful the tools could be, enabling you to build something. You just jump right in. You don't have to build all the libraries from scratch. They're there. And I'd seen how powerful projects can become and how popular they can be when the community just embraces them. And I saw that with Bitcoin because it wasn't something like somebody was trying to shove down your throat. It was like this organic movement and people just spontaneously gravitated towards it. And even before there was a price on Bitcoin, before there had been any exchange for dollars, you could see more and more people getting involved, more and more people, mining it for just because they liked the idea of it. And it was that organic community that sort of drove everything. And I like the ideals of it. I'm not a big fan of the massive inflation of the money supply. I don't think that's sustainable long term. I think we're kind of short-sighted in that we believe that we have the economy under control and we can just, you know, basically control everything. The puppet masters are in perfect control of the world. But when there's chaos, you learn that it's not really the way things are. So you get a bit of a downturn and all of a sudden, they're printing money like there's no tomorrow. And I think eventually the chickens come home to roost. So I just wanted to have another way to kind of look at the world and another way to allocate capital, different way to transact that doesn't, require a middleman to sit there and arbitrate. Yeah, you look at any application that's out there today and you can't deny the fact that open source code libraries provide the bulk of the underlying framework. I mean, you look at what happened with Linux, so Android's based on Linux. Linux is open source, suddenly Android's in not only every phone, but every little tiny embedded device that's running everywhere. Open source project, and they were competing with big companies, IBM, Microsoft. They had their own versions, and they're still around today. It's a battle, but you can see when the community gets involved, really useful things just get built. And so, just a totally different way of thinking and organizing the world. I think it was James Surowiecki who wrote The Wisdom of Crowds, and he started talking about projects like Wikipedia, where it was like, just seems counterintuitive. You mean anybody can write stuff on there? How do you end up with something that can take out Encarta? It's because the community people actually organically organizing themselves and, they're writing about what they know. And because they actually care, turns out it's actually pretty good quality. It's not perfect, but nothing really is. And you can't beat the price, right? Well, it's nice to have options. I mean, before it was just everything was very controlled, and even the earlier e-money systems kind of fell apart because it was, again, an individual trying to take on, a government. You're bound to fail. But when you have a distributed movement where everybody just says, we kind of like this idea, it's pretty hard to argue with that. Yeah, so I've been writing articles on Seeking Alpha, and that's been going pretty well. I've got a small but loyal following on there, and then occasionally I would share these things on Twitter. And I had the FX Street editors team reach out to me a couple months ago and say, "Hey, we want you to write for us." And so I said, "Okay, well, what? Tell me more." And then I didn't hear back for like a month, so I thought, well, who knows what's going on there. Then they reached out again, and I was like, "Okay, yeah, let's move forward with this." And then it was several more weeks, and finally I started communicating with one of the editors on there. And so I thought, okay, what am I going to write about on here? This is a Forex site, so the Forex markets are the biggest in the world, and FX Street is not, it's not the largest Forex website or publication out there, but it gave me an opportunity to talk to a different set of investors. And I think it's cool that they have a cryptocurrency section on there because some sites have just turned their nose up at it. I think it was Yahoo quit covering crypto. Oh, the price went down, must be gone. But so I decided I was going to write about something that it's kind of become one of my main themes, which is Bitcoin value investing. And that was the first article I ever wrote on Seeking Alpha, was basically that same topic. But I came back and revisited that and rewrote it with what I know today, with some more charts, some more clear language, and I thought it turned out really well. But basically, my message is there's more than one way to invest in Bitcoin. You've got people saying you got to just use these charts; it's the only way. And then they're talking about technical analysis, which has some problems. And you got people who think, well, you just buy it and then forget about it, and you never do anything. But to me, that felt kind of like a passive approach. And plus, what if you buy the top of a bubble and then you need the money the next year? I mean, there are some downsides to that too. So I try to approach it with value investing technique, which is, obviously Bitcoin is not a company. There's no balance sheet. There's no income statement, but there's still things that we can learn about it. And we can, we're not completely oblivious to the market cycles, which you just look back and you can see them, they're there. So if we can introduce some tools for people to get a little bit smarter about that, I think some of the huge volatility will eventually leave the market. And I think that's already happening. But, it's just one more step forward. Once people know the way the game works and the way the game is changing, you get better price discovery. So you don't get people saying, oh, I lost everything on this, or, just Moon Lambo running around with no idea what the fundamentals are. So that's essentially where I was going with that. Well, so I think Bitcoin is becoming more stable over time. And in the beginning, you're going to have a lot of volatility, and then later on, there will be less. I think it's kind of an S curve. Eventually, Bitcoin will, I believe, attain a very high value if it obtains a large amount of adoption. And there'll still be variance, but it's going to be a lot less than we see today. So for me at this point, I think it's like understanding the fundamentals and then looking at where the fundamentals are and then where the price is and trying to identify when you have gaps there. Because, at times it's going to be way bid up over what the network can even handle. You saw that in the last, speculative bubble. It was like people are just doing anything they can do to get their hands on this Bitcoin. And meanwhile, the blocks are full. They're paying $50 transaction fees and people are still buying. And it's like, it's just insane. And then you have other times where the network has been upgraded. It's faster. There's more businesses involved. There's more investment, more software developers, more projects. And you look at the price and it's, down in the dumps. So, if you can ride that wave, I think we're all better off. Value investing, yeah, for Warren Buffett did turn into kind of a hodl game. I mean, it sounds stupid, but you bought Coke, 20, 30 years ago or something, and he's just sitting on it. Of course, today, half of his top 10 investments are banks. No surprise. A little bit of insurance policy there, right? But even Warren Buffett has said recently that there's not a lot of good buys in the market. I think it was a shareholder address last year where he said, we can't find anything to buy, essentially, meaning the market's overpriced if you read between the lines. And now he's not going to do a lot of swing trading because at his scale, I mean, he kind of crushed the market if he did that. But yeah, value investing, the way I see it is just understanding the long-term trends and then doing a little bit of timing, but not getting into the weeds every little tiny price movement. Like even today's movement, you got people panicking, people freaking out, people leaving the market at a bottom, or near a bottom, which is kind of crazy because, I've been telling people this whole year that we were kind of in for an adjustment. So, this is the time to be getting back in, actually. Yeah. And in the article I talked about, the Bitcoin hash rate, which is, it's an interesting beast because some people say, well, yeah, the more the price goes up, the more miners you get. That's partially true, but then you have to think about what happened during the first year and, well, let's say first 18 months of Bitcoin. You look at the number of miners increasing. You look on log scale and you're like, oh, wow. Yeah, it's just going up. It's doubling. Now there's a price. Well, why was it doubling before there was a price? Maybe it was pure speculation. Maybe people believed in the stuff. But, then you kind of got this arms race where the price goes up. That brings more people in. But now the mines are so huge, it's like it's this major CapEx thing. You're going to put in, like I was just at Hut 8 Mining up in Canada, biggest Bitcoin farm in North America. $100 million investment to get 1% of the network today. That's what it takes. That's how much capital you have to allocate. 1% of the Bitcoin network. But it takes time. You can't just say, well, here's $100 million. You can't have a farm tomorrow. You got to buy the land. You got to get the power rights. You got to be in good with the municipalities because you're buying energy. You need cheap energy. You need the site prepared. You got to hire people. You need people who know how to run a data center, and you got to get the equipment. It's not necessarily the case that much equipment is even available today. It takes time to build and prepare. So you're looking at months or maybe a year until you see that money that you plunk down actually hashing. So when the miners allocate funds, it's a long-term bet. So, the price is going up and down every which way, but the miners, slowly invest. And occasionally you'll see the hash power go down too when we're in a tough market. But I like it because it's a little more stable and the price is still a lot more volatile. So it's kind of like a rubber band, the hash rate's going up and the price is bouncing around, Yeah, so I'm not a fan of technical analysis, and I know some people are going to nail me to the cross for that because it's a self-fulfilling prophecy. If you get enough people looking at a chart, they're going to behave in the same way. The problem I have is there's more than one way to do technical analysis, and there's hundreds actually, and the majority of them look at two main things. One of them is the price, and the other one is the volume. And then they draw these charts, these triangles and these head and shoulders and these inverted ducks, It's like, okay, this is some kind of a signal, right? But the problem is on the exchanges, people are trading, Bitcoin. They're not necessarily trading Bitcoin. You've got fake exchange volume. So some of the top sites just seem to appear out of nowhere. They've got no fees. So I could actually have, let's say, $100 in Bitcoin. I'm on an exchange with no fees. And I can write a bot that trades with myself and does that, many, many times per second. I can generate $1 billion in traffic by sending myself the same $100 back and forth with bots with no fee. And these exchanges allow that. Not only do they allow that, they need that because that's how they get on the map. So now you look at these exchanges and you're like, what is this exchange? It came out of nowhere. Well, that's where it came from. And some of these are scams. Some of them you've never even heard of. It's pretty shady. So there's so many things going on. And then when you do your ICO, you've got people with these market makers that are, literally, they're paid to make this market. So it's not just about price discovery. It's like, no, they've got 5 or 6 accounts and they'll take 10% of the ICO holdings and they just sit there and trade with themselves to make the market. And people have even said that, they're painting signals. They'll be looking in the chat rooms and go, oh, they think a rising wedge is forming. And they can actually just paint that rising wedge, but trading with themselves to induce people to trade. By paint. Yeah, so in other words, they go, oh, you want a rising wedge, huh? So they'll sell it to themselves at a higher level, or a lower level. You can paint any chart you want because there's nobody trading it besides them. So this is how the majority of these, altcoins, these new ICOs, that's what's actually happening. No one's using them. It's speculation, and the majority of that is the company itself with a contract. Actually, it's actually guaranteed that they're going to do this, and they need to. So, yeah, it's a dirty game. So I like to look at on-chain volume, which I think is much more reliable, because even if a transaction is cheap, let's say it's 10 cents to move some Bitcoin, it's something. Some people will say, well, that can be gamed, and I take issue with that because, you got 200,000, 300,000 transactions per day happening on chain, and the median transaction is $100. So why am I going to pay a 10-cent fee 200,000 times per day? That's $20,000. Why would I do that? Right. It doesn't make sense.
It's at least a lot more reliable than some centralized exchange.
Right, it's spam protection, right? You at least know somebody. If I'm a business, I want to minimize the fees that I'm paying. Maybe I can pass that on to my users, but everybody wants to minimize fees. Yeah. So I think it was Ray Kurzweil who made my favorite quote about this. When it comes to linear scale versus log scale, think about some primitive hunter out on the plains and you're watching this antelope, leaping across the field, and you're like, okay, here it goes, here it goes, here it goes. Now I throw my spear, and you've got to get really good at hitting that antelope. And if you're not, you don't get dinner, right? And that's linear scale. And that's the way our primitive minds, understand it. And it works in a lot of ways, but in a lot of ways it doesn't, especially with technology where you get effects that can multiply together and add on top of each other and speed up over time. So one of the best examples, I think, is with the internet. You look at when the internet was early on and people were saying, oh, same thing they're saying about Bitcoin, it's a scam, it's stupid, it's never going to work, you can't do, people didn't believe that you would be doing commerce on the internet. Paul Krugman famously compared the internet to a fax machine, but a funny thing happens when you look at the number of connected nodes on the internet. They've been increasing. And I went back and I got data from, I think it went back as far as the early 90s, maybe 92, 91. I don't remember exactly now. But you can look at the number of nodes increasing. And you look on a linear scale chart and it looks like nothing's happening. And all of a sudden, whoa, it just comes out of nowhere, right? But you look on log scale and you see it's actually been increasing, doubling for a long period of time. So simply by changing the y-axis of the chart, you can see that phenomenon. So Bitcoin, same thing. You look at the number of transactions that happen per day. You look at the number of unique addresses. You look at the hash power of the network or the price. Take all those things on linear scale and it looks like tulip mania, right? You're just going here and then boop, okay, and it crashed. It's like, but you look in log scale and you're like, oh no, it doubled in 2010, 11, 12, 13, 14. And sure, there's some variance in there, quite a bit, but it's a log scale phenomenon. It's been happening for almost 10 years now. So you got to look at the charts in log scale or you won't, it just doesn't make sense unless you look at it in that way. And that's very powerful because that means that when people think about things in a linear fashion, they're thinking, oh, maybe it'll be worth $10 more or $100 more or $20 more. But you have to think in multiplication. So it's like we had a bubble in 2013 and you got $1,000. Next bubble into 2017, you got almost $20,000. It's 20x. So if it bottoms out in this market, then the next bubble may be higher than that. So you got to think, orders of magnitude, and that's where these people come up with these figures, $100,000, $200,000 or more. It's actually just simple logarithmic function. Yeah, it makes sense why people look at the chart one time and go, ugh, tulips,
Right.
And you could have seen that, as you pointed out, multiple times.
Yeah.
And it probably will happen again too, so. Well, this is where I think it's interesting because very few people are actually involved. And very few people have been involved for any length of time. So even though you have people saying it, people don't really grasp it. And it's the same thing with the internet. We saw the internet coming and we were all excited about it. When I was in school, I remember I saw a TV commercial for the internet. And I was like, wow, when is this going to happen? That's cool. You can't order a cheeseburger now without the internet because you go in and everything's on a computer. The traffic lights, the infrastructure, all communications, hospitals, commerce, like planes, cars, everything is now connected to this internet. So it's just mind-boggling. I don't think it's a matter of even how intelligent you are. It's just that how could you imagine a world that's so completely different from the world you're in now? You don't have a point of reference. That's why we don't know where Bitcoin's actually going. And I think that's why it'll happen again too, is because most people maybe they jumped on board for the speculative bubble. Maybe they made some money, maybe not, but they're not still watching. And I know that because I'm seeing the Google Trends data. I'm seeing the traffic statistics and I'm like, it's funny because, I'm one of the people that said exactly what's going to happen with the market. We're way overpriced right now. And I've had people either get very confused or come at me and basically attack me and say, you say you think the price is going to go down, but you're a bull. And I'm like, yeah, obviously. It doesn't make sense. It makes perfect sense. Because if you look at it, it goes like this, but it's up, right? So zoom out and just look at the chart once and you'll see that's what it's doing. So yeah, in the short term, it's going to go down and then it goes up. That's what it's done for 10 years. So sure, the past does not predict the future, but I think the burden of proof is on someone saying that we're not going to see that same thing happen because I mean, it's playing out just like it did before. The speculative bubble bursts, a bunch of people wander off, but it doesn't die. They get stronger and stronger, and then eventually people go, wait, this is still around? Then they're going to pile back in. Then we're going to have another bubble. Sure, there's a limit to how many times that can happen, because eventually you get enough people in the population that have raised their awareness of it. But you ask the average person on the street, and they have no clue about Bitcoin, what it is, how it works. We're still in the very early stages, which is funny to say. And one of my biggest concerns is that when it does finally reach the point where it's more stable and everybody's heard about it, and the majority of the gains from being invested in Bitcoin are going to be gone, because it's like it's already got to $200,000 a coin or something, and someone goes, maybe I should buy a little bit of that. Yeah, maybe it'll go up from there to $1 million, but you're not going to see the thousands and thousands of times returned. Well, that's a good point. I mean, I don't think we really know where the top is, but I just think, let's say it takes 20 years to find, a fair price. If people are getting it in year 15, they're going to get less of that than if they got it in year 5, So yeah, it's completely possible. And it's true. We don't actually know if Bitcoin is going to be the thing. It could be something else that hasn't even been created yet. Maybe this is like the precursor to something that comes later, something inspired by Bitcoin. Of course, that's what every ICO is marketing themselves at, every other coin. And I just think it's more rational to believe that what we have going right now is working. It's scaling. And so, yeah, we don't know where the top is. I mean, it could get totally crazy. I guess I'm just worried that, by the time all the large financial institutions are really embedded, you're going to have people going, I should have got in. There's this tipping point where somebody puts it as a reserve currency, and then governments start getting involved, and, you got the hedge funds and Fidelity and everything. So there will come a point where, majority of the curve has been completed, but yeah, future is difficult to predict. Right. Exactly. Yeah, I mean, you go back and try to find things that behave in that way over the long term, and it's very difficult. I mean, basically, technological adoption is the only thing that we've seen that does that. And Bitcoin is a technology fundamentally. So you're right, there are a certain number of people that can be involved. But then there's also the machine world. You may have your device sending transactions. You may have multiple device sending transactions. So when, and there's, who knows, an infinite number of those that could be also in the system. Hopefully don't automate ourselves out of a job. Well, yeah, there's certainly two schools of thought there. And I do hope, I think it was Elon Musk that talked about this, do we get the Star Trek future? And, and that's the best case scenario, but then there are a lot of people that paint darker pictures too of what the world is like when humans become, horses and we're unemployable because, AI has gotten to the point where it's taken over. So, yeah, those are big topics. Yeah. And, yeah, regression analysis is typically used when you have normal data distribution. And this is one of the things that I usually want to make clear to people is that time series data you're not supposed to use regression on, but actually that is what, if you've ever charted like sales over time and then snapped a trend line on it, which everybody has done who's worked at a business, that's essentially the same thing. You're just trying to predict forward based off of whatever a current trend is. And so that does not necessarily mean that, this set A is causing set B to occur, but it just means that when you analyze the variance and you see that there's a relationship there, that there's some kind of a connection, and it may be once removed, like, for example, sales of, beach towels and ice cream, right? They're both happening in the summer. But, it's true that when beach towel sales go up, you sell more ice cream as well, right? The beach towels aren't causing the ice cream to sell, but there is a relationship. And that was kind of my point with the regression analysis on the hash rate is that, we had hash rate, then we had a Bitcoin price, and then they kind of both were growing up together. because the hash rate's more stable and Bitcoin's more volatile, there are times when the price seems to be way lower than the hash rate would indicate, and other times much higher than it would indicate. So the regression analysis just tells us how strong is this relationship. Yeah, it doesn't imply causation, like I was saying, but it's something. And so I use it kind of as a band to say, okay, well, how many standard deviations are we above or below where we might, predict that we are? And in so doing, that helps us to identify points where we're, maybe too high or too low. But hash rate is just one way that I do that. It's just one technique. I like it because it's stable, and it involves like a business investing money for the long term. Right. Like Hut 8's a great example. Who put up that $100 million? Somebody, right? In this case, it was the Bitfury group who happens to make Bitcoin mining equipment. But, that's 1% of the network. What's the other 99% doing? Clearly there are some savvy business people there controlling a lot of money, and look where they're investing it, right? Sure, they invest in a lot of things, a lot of places, but it's a vote of confidence from the business world. That's why I think it resonates with investors. Yeah, and the p-values and the t-stats also. It's a very powerful relationship. So, it's just one way of looking at it, and I think it's very strong. I mean, I think it's a tool that people need in their toolkit when you're looking at Bitcoin. So just been trying to get the word out to people. This is something you should be looking at, should be thinking about. It's not the whole story. And, Bitcoin is still a very, I consider it risky. I tell people that, I believe in it. And I think you and I are, on the Bitcoin, we're in the Bitcoin game. So we believe more than a lot of other people. But people still, I tell them look, we don't know what's going to happen. Maybe don't put your entire nest egg in here. That's probably not right for everybody. But if you're going to get some exposure, you need the right set of tools, and, Right. Yeah, I mean, it's a good point. I mean, I think if you look at some of the people that have decided to make that leap, um, you've got like Backed, for example. Here's a guy who owns the largest or second largest commodity exchange in the world and the New York Stock Exchange, saying, yeah, we're going to just get involved here. We're jumping in head first with Microsoft and Starbucks and the Boston Consulting Group, So people like that are taking a chance. It's not completely insane. It's not just like some crackpot theory that somebody cooked up. It's like, no, the guy who owns the New York Stock Exchange is getting involved. A number of billionaires are getting involved. You got Tim Draper, and all this, like, look at Andreessen Horowitz. And so I think when people come after Bitcoiners, they feel like they're talking to, local yokels like me and you, and they don't realize it's like, look, would you approach the guy who owns the New York Stock Exchange and tell him he's an idiot for getting involved in Bitcoin? He wouldn't give you the time of day. So don't act like, you have the whole thing and we're just like crazy for taking this risk. As you pointed out, I mean, I think some involvement is good for everybody, even if it's just learning about it. But even, if you got a portfolio and you allocate a tiny amount, let's say you lose 1% of your portfolio, hopefully you're not sleeping under a bridge. Right. 1% loss, right. But at the same time, you see 1,000% gain on that 1%. That's enough to make a meaningful impact. So
10x your portfolio.
Yeah, you look at, I tell people it's kind of like a game of roulette, right? You put your money up, you got a 50% chance it leaves, but with roulette, you got a 50% chance that you almost double your money. With Bitcoin, you're talking about, going up by orders of magnitude. Right. From 2015 to the end of 2017, we saw 80x returns. I started buying Bitcoin, it was $250, and I sold out not right at 20K, but fairly near that. Pretty close to 20x returns just in 2017, 80x returns. Find any other market where that's even a possibility. It just doesn't exist. So yeah, I think we saw that during the last bubble. It had gotten to the point where Bitcoin was already turning into a black hole that was absorbing capital. People were mortgaging their houses. People were maxing their credit cards to buy Bitcoin. That probably was unwise at the peak of the bubble, but you see already that the power of something that can give you those kind of returns is people go like, screw this, I'm going in. So I'm not saying those behaviors are wise. I'm just bringing up that at a certain point, Bitcoin is forced, into one of two paths. One where it does really completely revolutionize the way the world works, commerce works, and another in which something happens and just blows up and goes to nothing. But every day that doesn't blow up is getting closer to fulfilling that destiny. I think it was Hal Finney who pointed that out in 2011. And I wrote about this in Bitcoin's binary future. It's like there's only two courses that it can follow. Bitcoin cannot go sideways forever. It's just not the way the system works. Yeah. It's forced up or it's forced to fail. Yeah. And if it doesn't fail, then the price will go up. I mean, that's guaranteed by the economics of the system and by the game theory. Yeah, so basically, I looked back at that hash power in the long term, and you can see that it almost always goes straight up, but there have been times where you go into a super long bear market and the hash power will go down for a while. But inevitably what happens then is even if you have a decrease in the number of miners, next generation equipment will come out, and so those miners will then upgrade their equipment, and now you see the hash power come back up again. So that is based on the fact that we've never seen a prolonged period of hash power decreasing. We have seen periods of it decreasing, maybe once or twice, but you're talking about a few months, maybe. I'm going off memory here, but I don't think we've ever had a year where the hash power was down from the year before. So if that were to happen, that would represent a situation that we haven't seen before. And that could indicate that the predicted price would be lower than it is. So if you had the price going up a ton while the hash power is going down, that would represent a divergence from that model. Yeah. So the floor on there is just like the lowest sample we've ever taken, meaning that the hash power was really high, the price was really low. That would have been like the best time to buy, because when it comes up on the other side, that's where you make your gains. So the floor could be breached and it could move down, just like the ceiling could be breached and it could move up. But those bands represent the furthest we've ever been on either side in terms of the number of standard deviations. So speculative bubble, you're way the heck up here. Bear market, you get way the heck down here. So yeah, those bands could move over time. That regression will need to be rerun as we get more data. And so, that will fine tune a little bit. Yeah, so I actually didn't have my models. I mean, I'm still working on them and making them better today. They're not done. I keep learning more. I keep adding more to it. I keep fine tuning. But I really had the basis of my first one at the end of January. And we had sold some in November, December, and January. Pretty much after that, we've been out of the market since the last few months. We've just started to buy back in again. But yeah, that's the idea. And I mean, I guess it was kind of dumb luck about when I built that model. I happened to be an MBA student at the time, and I was taking my last stats class for business stats, and the professor let us work on whatever we wanted, and I did it on Bitcoin. And that's when I started seeing these things, and I'm going like, whoa. At this point, I didn't know whether I was crazy, whether the model had any validity, and I didn't really publish anything for several months later, because I wasn't sure if people were going to say, well, this is ridiculous, but actually it's playing out almost exactly like the model predicts. And so I'm glad that I've shared it with people, and I hope, if nothing else, I've saved some people a little bit of pain, and maybe we can make a little bit of money by using them to, kind of fine tune our strategies and whatnot. But basically that's the idea, yeah. Yeah, and this is another observation about using, I'm glad you brought that up, because the way I see it is after you have a huge bubble, you don't just come back to par and then sit there. You tend to go below it. So if the model is saying that $5,000 or $6,000 is a fair price based on the hash power of the network, it doesn't follow that line exactly. It goes way above it, and it can go way below it. And so generally, after you have been overbought for, and overbought is a term that has a different definition. I have hijacked that definition. And I say that it's been overbought for a long period of time. It has to come back down and reset itself. So yeah, I see it coming under there. And then if you look back, like after what happened 2013, 2014, in early 2015, it was low. That you were running a z-score of like negative 0.5 or something. So, and this is in log scale. So it wouldn't surprise me at all to get back there. But yeah, it goes down and it stays down for a while. And that's where everyone is, going, what's going on? What's happening? And that is the time when, that is the moment. If you can act, is the time to act. Well, it's not even that the emotions are to blame, because I think, you turn on your TV and who do you have? Yeah. We got billionaires and hedge fund managers on there saying we're going to have $25,000 Bitcoin by the end of the year. And then the price drops 10%, 20%. They go, sorry, I meant 15,000. It's like, okay, we've got like 6 weeks till the end of the year. That is not going to happen. I'm going to tell you that's not going to happen. But, when you only put people on TV who give you like these lofty price predictions by the end of the year, it's like, I mean, they're discrediting themselves, but that's what people are seeing. And so these are supposed to be the experts. So that's why I think people need to do their own research. But, let's be real, that takes a lot of time and a lot of specific knowledge. So at the very least, take in information for a number of sources. Try to find high quality sources and just listen to as many people as possible and see what makes sense. Don't just listen to the guy on TV who's telling you, Lambo by the end of the year. It's not going to happen this year. It'll happen, but not this year. Well, yeah, on Seeking Alpha, I have more stuff too that I've been publishing, and I guess two things there. One of them is that I have other models in addition to just the mining one, but also when the market moves a lot, I'm seeing now that I need to be able to provide this data more in real time, and so I'm looking at ways to kind of automate this process, which I started off doing manually, and it's just been in Excel. So I'm looking at ways to get that done programmatically, and I hope that at some point in the near future, I'll be able to just post this up on a site somewhere, and you can come and just see the stats in real time, kind of like what Willy Woo does for the NVT signal, or if you go onto Coinmetrics, and you can just see the stats in real time. So that's where I'd like to go. It just takes some time. It's been kind of a crazy year, and but that's what I'd like to get to. Yeah, the oversold bear market. Yeah, I mean, I agree with you. I mean, I didn't, in 2017, I didn't have these models, and I wish I had, when I started my Bitcoin mining company, for example, the timing with my fund was more in tune because I had started to build this, and so that was one of the reasons why I started my fund when I did, is I had the models in place now, and so it was like, okay, we can time this. I'm glad you you mentioned this dollar cost averaging, because yeah, that's very important. People will see me buying now and go, why are you buying now? Are we at the bottom? And I'll say no. Well, why are you buying? Well, I mean, it's, you actually take a position, you take a position, you take a position, and you try to average in as close to the floor as you can. But I'm not so arrogant to think that my models are perfect, and there are a lot of other models out there, a lot of smart people. There's a lot of research, and there's a lot of chaos. So, I'm sort of hedging against the fact that something we don't know about can happen. And I think people should do that. When you see the prices at an opportune time to buy a little bit, buy a little bit, buy a little bit, slowly take your position and be patient. And like you said, when we get up near the next bubble, which will happen again, it's like, don't sell everything as soon as it gets over, but, slowly move into cash, and then wait. It takes patience, and can get very boring sitting around waiting for a market to do what it's going to do, like sitting around for months going like, oh my God, what's happening? But, it's worth it if you do. Right. I mean, yeah, like you pointed out earlier, there's no limit to the amount of fiat that can be printed. Right. Because you just keep adding zeros, right? It's magical. So, some of the Bitcoin price appreciation is really the dollar going down. So we'll see where that leads. I mean, it'd be interesting to see once it's digital, because now they can control it even more. You want zero interest rates enforced automatically? You want negative interest rates? You want to multiply the money supply by 10x? Once we're pure digital currency and they get rid of paper dollars, that's going to be a much easier task to accomplish, and we haven't even seen that yet. So, yeah, so you can find me on Twitter at Hans the Red, and I'm also over on Seeking Alpha. You can just look up Hans Hauge on there, and my Red articles for FX Street now. So, been doing those. Just started that. We're going to do another one soon, probably about once a week over there. The Viking.
The Viking. All right, see ya.
Peace.